that we give you some more nuggets here. A very powerful nugget. Perhaps you you haven't really comprehended the power of transfer. You haven't comprehended the power of transfer. Over here in the automated velocity banking side, we do that, and that's the symbol for transfer. Let's go ahead and we'll wait till more people are on here because this is really powerful, really powerful. When you're talking about transfer, there are different types of transfer, right? Some transfer risk, and that's called what? Insurance. But one of the most powerful transfers that you can make is transferring your debt into wealth. And so this is the symbol for transfer. And that's one of the most powerful transfers. I'll say it again. The most powerful transfers that you could make is to transfer your debt into wealth. And I'll go ahead and show you what I mean. This is why we're not afraid to use our credit cards. This is why we're not afraid to use that which the banks has said, you know what, you can go ahead and use that. Whether it's loans, right? Now remember, lines and loans are supposed to be used for what? Assets. They're supposed to be used for assets because you can pay a loan off really well if that investment or that asset does really well. And this is whether it's paper, whether it's crypto, whether it's real estate. Can I just share with you a secret? There's no such thing as a bad investment. There's no such thing as a bad investment. Now, why do I say that? Because people are making money in everything. There are just certain ones that are making the money, right? Right? So there's smart investors and there are those that need to learn a little more. And so this is what we want to focus on right now, and that is transfer. Now, a lot of times you've seen me do the line, right? And then the loan, okay? But realize that we're talking about way more than lines and loans when we say that, okay? You don't have to have a line of credit in order to pay down any debt massively. You've just got to know when to transfer. When do you need to transfer that line of credit? When do you need to transfer that a certain checking amount, right? Whether it's 2,000, whether it's 3,000, into a savings so that from the savings account, you can pay that principal on that mortgage or pay the principal on that auto loan, okay? So we need to make sure that we're focusing on the transfer. Very powerful, because a lot of times we think of transferring risk, right? We relate that to what? The insurance products, okay? But did you know that you can actually transfer risk when you transfer that line of credit, right? And take that loan? Because many times what they're not sharing with you is sometimes that loan amount, that may be, let's say, $10,000, that loan amount is going to be costing you more if you choose not to use that line of credit and switch that type of debt out, okay? To where now your line of credit is $10,000 because you've paid that loan off and you're saving hundreds, thousands, tens of thousands of dollars depending on what that loan amount is. So that's what makes it powerful, the transfer. Now, a lot of us have heard of the term chunking. I use the term chunking as well. This is just something that's in math, but you don't have to do that. You don't have to chunk. You've just got to know at what time that you're going to chunk and the amount. The time and the amount that you're going to chunk. So you don't have to do the full 12,000 towards a massive principal loan balance. You don't have to do that, but you do need to know what time you're going to chunk and the amount. When you know that, you'll then be able to have clarity, okay? And if you're missing that, just let me know, okay? We do have the link right there to the class that will actually come with your proposed plan in everything so that you can know when to chunk, where to chunk, when to transfer, including the date. We go over everything. So the time and the amount to transfer is going to be key in making sure that you know when you're going to deploy that capital, because it's a lot of capital. We have $30,000 loans, we have $50,000 loans, we've even got 400, 700,000 mortgages. There are people with way over a million, 2 million, and it's not that they can't pay it. It's not that they cannot pay it. They want to know how to more effectively pay it. That's where we step in. That's where a system steps in. And this is with anything. There is a more effective way of doing it. Is there a more effective way than the proposed plan? Yes. Is there a more effective way than velocity banking? Yes. Is there a more effective way? And that's what we show you. Does that make sense? Because when you're talking about lines, when you're talking about loans and even checking accounts, it's not that you can't pay it. I mean, I'm sure that the majority of you don't have a problem with paying your bills. You just know that there's a better way to pay your bills. You don't want to keep dishing out $1,000, $2,000, $3,000 needlessly to someone else year, month after month, year after year. Can I tell you something? My opinion is you can do more with that money than the bank can. Because every mortgage payment that you make is another mortgage payment for them as well. They probably have 10 mortgages, okay? I think the limit now is 10 mortgages to a name. The lenders I'm talking about. And so it's time for you to have a banking structure, right? A banking algorithm that'll work for you instead of against you. And that's why I just wanted to make sure that you knew that the power of the transfer is well within your grasp. You don't have to chunk, right? You don't have to do the chunking method. You've just got to make sure that there is enough in your checking, in your savings account. What's going on, Ray? It's good to see you, man. Yes, it will. It'll set you free. Look, in your checking, in your savings account, have that money there, and then after that, you can deploy it to work for you even more. Because all money is, let me share with you what money is, okay? What do you think money is? Because I'm going to show you what money is to me. That's what I think money is. I think money is a soldier, okay? I think money is a soldier, and that's what money is good for. Go out and fight my battles. It's always better when someone else fights your battles. Why are you fighting your battles? You're looking at your statements. Can I just get it? There we go. You're looking at your statement, and you're getting all sad, okay? You know why you're sad? Because you're wondering why this much money. It's good to see you here, man. Absolutely, Ray. Why is this much money going away from me? I could have bought my daughter a car with this money. I could have bought my mom a house with this money. Come on. I could have invested. You could have. The question is, why aren't you? Because you don't know, and that's okay. Because that's why we're here. All right? So we do have this link right here if you are wondering, man, you know, how can I get out of the situation I'm in? Or maybe you're here and you're giving up. A lot of people are giving up. Okay? But that's not you. Maybe you're here and you're wondering, my goodness, man, I really don't know if my situation can be helped, CJ. This is the last straw. I don't know what I'm going to do. Please talk to us first. Before you give up hope, don't give up hope. Before you do that, before you even think about it, please talk to us. Okay? Let me know. Let me know. Because the power of the transfer is so powerful. Okay? It's so powerful. When you know when to transfer and the amount to transfer from checking to savings, whether it's from savings to your credit card, or maybe you have a HELOC, and maybe you need a bigger HELOC. Maybe you're looking for more access to capital. It's here. Absolutely. What is a HELOC? Let's go ahead and hop on that. There's a lot of questions on that. A lot of questions on that. What is a HELOC? What's that all about? Okay. Now, a lot of you already know what a second lien HELOC is, right? I'm going to give it to you like this because this is in a nutshell the difference between the second lien HELOC and the first lien, or the all-in-one. Okay, this is the difference. I want to make sure you see this here. Okay. Okay, that's, hold on, me. Okay. Can you see that? Okay. Let me go ahead and place this right here. And then right here. Okay, I'll get out of your way so you can take a screenshot of that. That's the difference between the second lien HELOC and then the first lien HELOC. We're actually going to have one of our bankers come on and explain a little bit more about the first lien HELOC. And because that's what she specializes in, Emmeline, just dropping her name so you know who it is that's on next with me. But the first lien HELOC is so much more powerful. Why? Because it gives you access to more capital. So when you have access to more capital, what happens to your debt? The higher the cash flow you have, the faster your debts get paid off. Okay? And so just wanting you to know that this is what it's all about. We want you to go ahead and get in touch with us. We do have a class after. You go ahead and click on that link, you enroll, then I'll give you your personalized, customized debt elimination plan to you, okay? So I'm just letting you know that we are available there. We're also available for the financial GPS that a lot of people are asking about because they're sick and tired of things changing and they have to write down the mathematical equations instead of taking advantage of a whole software system that's been invented. Listen, there's nothing wrong with the typewriter and I'm not making fun of you, all right? But if you want to continue to use the typewriter, that's your choice. But a computer is much better. If you want to continue the old ways of banking, the fossilized ways of banking, that's good too. But there is a velocitized way of banking that you can take advantage of right now. And so the difference between first lien and second lien is right here. And then we told you the power of the transfer. I want to go ahead and write that down one more time. There is a powerful, powerful thing when you know the amount to transfer and the time to transfer. Does that make sense? It's all about the amount and the time. If you don't know the amount, that's okay. That's what we're here for. If you don't know the time, that's all right. That's what we're here for. As a matter of fact, I just did a video for a lady, and she was like, "Man, I need to see where we can get out. We can get out of what we're under." Okay, and that's debt. So we did the transfer for her. Matter of fact, she was on a plan. She was on a plan to pay off her debt in, I believe, 10 years. 10 years, but we got her down to 1 year. 10 years versus 1 year. What do you think she's going to do with that money? It's going to go to her. She's going to be the priority now. And so just wanted you to know about that, man. It's good news when people choose right, right. And when people choose correctly, when people choose themselves, and they're saying, you know what, I need to take a closer look at my finances. Is there a better way to pay these bills? Is there a better way to pay off this mortgage, to pay off this student loan, to pay off a personal loan, to pay off this loan shark, to pay off this payday loan? It doesn't matter what loan you have, and there's no judgment here. We pay off any loans. I actually read a terms and conditions in one of our payday loans here. Listen, I'm not making fun of anybody because I know y'all got lawyers, all right? But I read it and it says something like 109%. 109%. Can you believe that? Talking about payday loans, talking about title loans, talking about these high interest loans. Now, ask me if I care about any of that. Ask me if that was an impossible situation that we couldn't get over with our clients. No, it wasn't impossible. Over $17 million in debt under management, it's not impossible at all. We get people out of debt, not into debt. Does that make sense? And the truth is that when you are in debt, man, sometimes you can't breathe. Sometimes you can't breathe, man, because it gets to be emotional, all right? And that's where we step in and we're like, no, you got to breathe. Let's go ahead and go over these numbers and share with you what we know. You got to have a system, okay? So the transfer symbol, okay, we need to take advantage of that, folks. We need to take advantage of this transfer, whether it's line, your line of credit to your savings, or your checking, and this is the transfer symbol, checking to your mortgage, whatever it is. There's a reason why we're transferring. We're not just transferring to be transferring. We're transferring so that we're building up, right? We're building up. We have a strategy. We have a tactic to eliminate our debt, whether that's the mortgage, whether that's the boat, whether that is the student loan, right? A lot of student loans, whether that is whatever it is, personal loans. Transfer. Think transfer. That's where we want your mind to go in this season, in this month coming up in May. Where can I transfer this so that I can build this up? The bottom line with that is you got to know what time, this is very crucial. You got to know what time and the amount. Champagne, good to see you, man. Good to see you. 2980 Draco, good to see you. The time and the amount. And we can help you with both of those, all right? You don't know when to transfer. It all depends on your statement date and your payment date, okay? Because we want to make sure that we are paying before that payment date. Do you know why? Because every day, many times, that average daily interest is accumulating, isn't it? It's accumulating. And so we don't want to accumulate another dollar without having a plan to pay it off. And this is how you do it. This right here. The transfer. How much? How much are we going to transfer out of there? How much are we going to transfer into there? Because we transfer out many times to transfer in. And when this is gone, watch this. When this is gone, that mortgage is gone, that $200,000 mortgage is gone. Right? That $300,000 mortgage is gone, that $30,000 car, when that's gone, and that $700 payment, that $1,500 payment comes to you, you'll then realize, man, I gotta wake up because I'm on my way to freedom. And the bottom line is, once you get connected and are on the road, you're already there. You're already there because you already got off the road of having no clue, right? You got off the road of the bank's plan and on the road to a better plan. So this right here is where it's at. Transfer, transfer, transfer. You say, CJ, I don't know when or how to transfer. Let me know. Talk to us. Get the class and get your proposed plan, okay? bit.ly/Velban2, okay? Velocity Banking 2.0, that's why we made the whole class, to deep dive into these situations. Now, you may have a business as well. Right, exactly, Carmen, exactly. How to buy a car. Do you get a regular car loan, right? You can get a regular car loan. Listen, I'm not against car loans, not against car loans. I'm just against the interest that they're charging you. That's what I'm against. So, absolutely. If you want to, you can pay with the personal line of credit. Why? Because what are we going to do? Can we go ahead and answer that one live, Carmen? Let's go ahead and do that, okay? Let's say you've got a $20,000 line of credit. Would it be better to get a loan? Well, there are a lot of factors that take place, okay? That's why we like doing customized. That's why we like doing customized. So let's go ahead. Should I answer that right now? Should I get the car loan or should I pay it with a personal line of credit? Well, if you get the car loan, okay, let's say 20,000. Or personal line of credit. Now, I know I've done this plenty of times, and you guys already know, but I want to introduce something that perhaps I've never introduced here before. Hey, Rachel, good to see you as well. Perhaps I've never introduced this before, and I want you to take a look at this, okay? Again, there's the class. I want you to take a look at this. If you're talking about a car loan, let's go ahead and divide these up. Aren't you talking about something that's going to report to the credit reporting agencies when you're talking about a car loan? All right, yes, we are. What about a personal line of credit? Is that going to report to the credit reporting agencies? Right, yes, yes it is. So if we were to just buy the car outright with the personal line of credit, okay, which is something we can do. We can take it right out of the personal line of credit. We can say, here you go, here's 20 grand. And the car company can say, all right, yay, everybody have a party. However, what do the credit reporting agencies like? Do they like it when people use credit wisely? And do they like it when there's more credit than just the personal line of credit? Do they like it when there is a plethora of entries, good entries, okay, might I add, on the credit reporting agencies? Do they like that? Sure they do. And so what are your thoughts on this? And I'll just submit this to you. What are your thoughts instead of just using our personal line of credit, what if we were to get the car loan and then pay the personal line of credit, pay that car loan off with that personal line of credit? How about if we just paid that car loan off with that personal line of credit? That way we have two entities reporting to the credit reporting agencies. Folks, velocity banking is not just about money. Velocity banking is all about doing multiple things at once. Making $1 do the work of 10,000. Does that make sense? So let's have you look at it now. So instead of just doing the personal line of credit and paying the car off, why not go ahead and get the car loan and then pay it off with the personal line of credit, perhaps down the road? Because have you ever heard of the term, you got to pay to play? Many times, and you know what, this isn't my saying, so I gotta give credit to who credit is due. Eric, you know, Eric Weasel. Yep. I gotta give credit to you. We do thank you for that saying. But if you're gonna be cash rich, many times you'll be credit poor. But if you want to be credit rich, then sometimes you'll be cash poor. But in this, when I say cash poor, I mean you won't have as much cash because, of course, you'll have to pay that interest from the personal line of credit as well as the car loan. However, you just reported great to the credit reporting agencies. And oh, by the way, does that open you up to more lines of credit? Does it open you up to more credit? Especially if you're in a business, especially if you're an investor, you like credit. Does that make sense? And so let's go ahead and just think about some of these things. And I'll leave that up to you, Carmen. If you want to go ahead and pay it off with a personal line of credit, you already know how to pay the personal line of credit off, don't you? Right? Checking account. That's going to be your checking account, at least for a time, right? So you're going to put the income inside of here because now we have a balance. But we just have one balance because we paid this car loan off. Okay? And so we pay this, the $20,000, the income comes in, and then the expenses go out. Then the income comes in, the expenses go out. Whatever's left behind is what's going to pay this $20,000 off. So let's go ahead and do that calculation right now. We have $20,000. And let's say we have $2,000 in cash flow that's going to be left behind on that line of credit. I love doing this. You guys know I love doing this. Mark out those zeros. Mark out those zeros. How many months is it going to take you to pay off this line of credit? It's called the velocity term. And how you calculate it is like this. Velocity term equals the balance divided by the cash flow. Can you guys see that? There we go. Velocity term is the balance divided by the cash flow. You can know when you are getting out of this particular circumstance, that particular obligation, okay? And that's 10 months in this scenario. 10 months. Now, once you've paid that $20,000 off, the good thing about it not being a loan is you can use this $20,000 to leverage more and more and more. Can you do a down payment on a house with $20,000? Depends, right? Sure you can. Sure you can. So if you have any questions or you want to hop right in, you want your proposed plan right now. You don't want a financial GPS. You don't want anything else. You want your proposed plan right now before you go on vacation. All right. Go ahead and go to bit.ly/capital VEL, capital BAN2. We'll get that right over to you. It'll be done within the 24 hours. If you want to go a little bit further and you want to free up some cash flow, you want to make sure that you can see all of it right before you. You need to know when to transfer, right? Certain balances, maybe the checking account, the savings account, the line of credit. You need help in making sure you know where all of that money goes. Then just go ahead and let me know. Let's go ahead and what's going on, Santiago? Good to see you. Just go ahead and let me know. We got it right here in the description box below. Okay, how to get in touch with me. Calendly.com/credit whiz. We're definitely here for you. If you want Carmen to do that car loan, go ahead and do it. If you just want to pay it off, you don't want any more hassles, that's good as well. But just know that's the only thing that's going to be reporting, right? The personal line of credit, because you didn't get that car loan, okay? And just keep in mind your credit, okay? 30% is the credit utilization ratio that the lenders like, right? We stay right under that, right? Let's go ahead and stay at 25%, I say. All right, so let's do it. JJ, yes. All right, I have a personal line of credit. That sucker's maxed out. Congratulations, by the way. That's a good thing, man. That's a good thing. You're not afraid. Need help paying this off quick so I can get back into paying off everything else. You know what, JJ, since you need it quick, I'm gonna go ahead and suggest go ahead and go here. Go ahead and go here. And we'll go ahead and give it to you quick, man. We're not gonna play around with it. I understand when you say quick, I know exactly what that means. I know exactly what that means. So yeah, we'll just go ahead and do it. What's going on, Richard? But do you see what I'm saying? It's all about taking that dollar and making it do the work of 10,000. That's what velocity is. It's not about working on your life, right? On the cotton fields, okay? And having nothing to show for it. It's not, okay? Other people can do that. What we want to do, everyone, is we want to make sure that we are having the maximum leverage. And that's why it's called the Money Max account. We want to make sure that every dollar is maximized so that we don't have to go back and say, oh man, I should have done this and should have done that. You've got a system now and you can work that system. All right. Again, this is a good example of a good and a better, right? And of course, that good and better is all going to depend upon you and your goals as well. If your goal is to just pay off the car loan, you don't want to mess around with the credit reporting agencies, then by all means, please do the personal line of credit. Okay? Just boom. But if you want to build even more credit, okay, then we have to go ahead and get those loans because we're going to be building up credit. And oh, by the way, did you know that you can get a bonus? I don't know if you knew this. Did you know that you can get a bonus with the credit cards and the lines of credit? With lenders, you can get a bonus. You sure can. Can somebody tell me what that bonus is? Yeah. When you are doing what you're supposed to be doing, paying early, all right? When you have that credit utilization below the 30% and you are utilizing your credit, most likely some lenders will be like, and what will they consider? What will they consider? They'll consider something and maybe they don't call it a bonus, but we call it something else. Does anybody know what that is? Has anybody ever been a victim of this word right here? A credit line increase. And that's a V. That is a V. Good job. That's a very good question. Has anybody been a victim of a credit line increase? I know I have, okay? I've been a victim of a credit line increase. And what that does is it gives you a bonus. Maybe it's 5,000. Maybe it's 10,000. Okay? But that's money that you didn't necessarily have to work for. The lender saw your reputation or your credit, and they said, we want you to spend even more. So they reward you by lowering your credit utilization. By lowering your credit utilization. Okay, and increasing your leverage. But it's only increasing your leverage if you've got a plan, right? So let's go ahead and be victims. Let's go ahead and be victims of credit line increases. Okay, increases. That's what we want. And so that was actually why we wanted to go ahead and do the car loan and the personal line of credit, to let them know that we're not afraid to use these tools that they've given us. And when you're using them correctly, they reward you, right? Now, that's not going to happen in your checking account. It's not, yes, that's right, JJ. It's not going to happen in your savings account. It's not going to happen right? What they'll do, right? Can you imagine them saying this? Hey, man, you've been a good steward of all your money, and this is your checking account. We want to add 5,000 extra dollars. Will they ever do that? Have they ever done that to you? No. And they most likely will never do that. But will they do it on the line of credit? And now you know why we love it so much. Now, do you have to have a line of credit in order to use velocity banking? No, no. You just got to know this right here. That's the international symbol for transfer. We just got to know the time and the amount. The time and the amount to transfer. That's it. That's velocity banking in a nutshell. What is this? Okay. Is it 2K, right? 3K. Maybe it's $100. To the banks, every cent counts. And that's why we, in our system, we count every cent. Okay? Many times you'll see transfers like this. And you're wondering, man, why? Because our system knows what the bank knows. It's good to have a banking algorithm that is for you versus a banking algorithm that's against you. Right now, people that are on the bank plan, that algorithm is against them. That's why they keep getting surprised. It's not your fault. You know that, right? Yep, it's one time, man. One time. And we shoot that right over to you, man, within the 24 hours. We sure do. Yep, one time, buddy. JJ, yes. But this right here is actually an algorithm that works for you, right, instead of against you. And it's very important to realize that it isn't your fault. You are setting a system that's run off debt. So, of course, it's not your fault at all, okay? No one taught us this. But there is a way out. Mortasis, and Christy, and there are others, right, that just have said, you know what, let me see what it's about. And they couldn't believe it. Why? Because 17 years, 27 years has gone by, 30 years has gone by, and they've never known that all the money they were looking for to pay off their bills was actually right under their nose. I actually remember, hey, yes, I'm actually referencing, Will, I'm glad you joined us, man. I'm actually referencing the velocity banking and what it is in a nutshell. Okay, it's all about that $1 doing the work of 10,000. All right? And this is what it is in a nutshell, knowing the time and the amount to transfer. What date, right? What are the dates that I have to transfer this money in order for me to have what I need to have to pay this massive principal off, to cancel as much interest as I can? And that's what the system is all about, okay? Now, if you needed to know more, or you need a proposal right now, you need a plan right now, then you can go ahead and get the class. If you want to know more about velocity banking and how it can be customized to you, you can go ahead and let me know. We'll have a schedule a phone call. We'll see what your scenario is. We'll plug it in and see when your debt-free date is. Okay? Both of them will give you the debt-free date. It's just one you type in and then pow, and you'll get that on a continual basis. It'll be a one-time thing, and you'll have it for life. Okay? Hey, good job, Will. Good job, man. That's awesome. Hey, man, could you do me a favor, Will? Share, man. Share with others. And God bless you, man. God bless you. People are hurting around here, man. Perhaps you want to do a YouTube. You know what I mean? Go ahead and do one, man. I'm sure you can. You don't even have to show your face, right? But share with these people, man. Hey, this is how I became, debt free. Absolutely, man. Absolutely. Because that's what we need, man. Oh, there you go. That's what I'm talking about. That's perfect, Will. Man, you'll do well too. You'll do well. And so that's what it's all about, folks. We need the time, right? And we need the amount. We have the dates. You'll get the dates inside of that system. And remember, you may be thinking, man, what is that word soldier up there for? Well, that's what money is. Soldiers to be deployed. Folks, if you have, God bless you, man, take care. If you have any questions, right, let me know, all right? Man, it's been great with you all. It's been a nice, quiet day here in Arizona. Hope it continues to stay that way. If you have any questions, let me know. God bless you. We'll see you in another video.